Hey, good evening, all. Hey, I really appreciate you taking the time out to spend a few minutes with us. I know most of us have probably crossed paths along the way. Some of you are probably colleagues of mine. I see a couple of, oh, really nice. I see a couple of interesting names here. Thanks for coming on, guys. Uh, Demio is new to us, so it seems to me that that we can't have a back and forth conversation. But throughout this conversation, by all means, any comments, any questions, any messages, there's a text bar to the right there. Been practicing on it a little bit. It works. Uh, our new company is Capiform. We have been working on it since, I guess, January of 2019. Software platform was finished. MVP was finished maybe middle of January. We tested it, we cleaned it up. Uh, Lucky enough to have some good clients of ours. I'll go into that in a little bit, but clients helped us really to build this out. What is it they needed? How could this be really useful to them? And so interesting, this pandemic, it's been really crazy and all, and for a lot of us, and just so different. But the idea that we were, a year, maybe just a little bit over a year of building out this digitized platform, uh, if you build it, they will come, was really interesting for us. We, thank God, we've had a lot of nice experiences with our work since it's been done. So let's talk about the pandemic for a moment. Let's see if I can clear this out. Yeah, there it is. So Capiform was really born out of our consulting work at Sci Strategies. We were building scorecards for small business lenders. We were helping them with their operations. And although their credit modeling and their scoring became much better and their portfolios continued to improve, they were still having a hard time growing. And it was really on the operations side too. Lots of manual processes, lots of handoffs, queuing time. So we were asked, make us really better, not just make us underwrite better. And so that was really the impetus that got us started on Capiform. COVID-19 came, and we saw a lot, and you guys probably all experienced this too. Everything came to kind of a screeching halt, and so many businesses were not performing because they were asked to close. You look at the bottom there, business closing. People got a little bit frantic. We had lots of clients with tons of money on the street trying to figure out what was the best way to get them, either stable or, modify payment schedules. And in some cases, you just couldn't, of course. At the same time, folks had to keep funding. When you have a credit line, you're paying for it. You just got to keep figuring out what to do. So got it super tight, started looking at which were the essential businesses. I think there's a slide here about some of the essential businesses, but really quick crisis management type decisions that we had to make. And that unbalanced portfolio, it's so funny, folks were saying, oh, we really like construction, or we really like restaurants, or some folks were lucky and others weren't so lucky. PPP program was really interesting for us. It was really our first test of our work to see, the way that we built this platform, pretty modular, pretty flat. When PPP came along, we were like, almost as like a test, we should try to build this out and see how fast we can build it. Thankfully for us, one of our advisors said, don't worry about the front end of the PPP program. It's just really about document collection and verification. There's no real underwriting there. Said, what might be more interesting for you guys to consider is really the back end of this, the forgiveness product. And John put together a couple of webinars. We made maybe 25 or 30 phone calls to credit unions and cash advance companies and folks who had gotten into the PPP on the front end, and got nice feedback. Folks were like, yeah, we did this manually. We have a ton of paperwork, and files came to our emails, and files came all over the place. It would be pretty cool if we could organize this. And so we did. We built out that forgiveness product, I think from the idea to running the webinars to actually building it to getting a customer onto the platform. It took us like 45 days. And, that was in July or in August. Again, this lack of historical. People are asking us to now help them with their scorecards and how should they modify. And this whole kind of black swan event, such a John term. We just tightened up. like super tight. We just didn't know. Like, when was the last time this happened, guys? And let's use that as a reference. 100 years ago. So we've been a good part of our clients' kind of crisis management these last 7 or 8 months, and thank God we've learned a ton. So where is the merchant finance industry going? And again, a little bit of a guess here, but so much information out, and it seems like businesses are opening again, and things are getting not normal so much, but maybe a semblance of normalcy. And hoping that this vaccine or these vaccines are as awesome as advertised. What's really interesting is that everyone is looking to automate a little bit now. So the idea of kind of this digital transformation has been really interesting. It's really because folks are working from home. Like, no one's going into their banks now and looking for loans, and it's just different. So we were surprised to see how much kind of pressure was coming from up top, from credit unions and community banks. We know what we know, and we looked, of course, to our friends in the merchant cash advance industry. Got nice feedback there too, or nice interest. But the interest we've gotten from the credit unions and the credit union leagues and associations, almost like the house is on fire, and to them, because 99%, if not 100% of their business was face to face in the branch. So that's that next one there, new competition. So now that folks are seeing, I don't want to say how easy it is, but how much easier it is to do these small business loans. We're looking at folks who had either an interest in providing SBA loans or currently provide SBA loans, looking to do smaller and different types of deals. Kind of akin to the SBA Express product, but really when they're talking to us about it, we're laughing to ourselves saying, guys, this is just a cash advance. This is a real merchant finance product that these folks want to offer. And because of their cost of capital, it's all their members' money. And because all of their members are owners, there's very little marketing costs. We're beginning to see folks in the credit union space, and they move slow and they're nervous about making big moves. But talking about a merchant finance product as if they've always been doing it. When we have our conversations with them, this will actually be interesting. Somebody jumped the gun with a question. I'll get to that. I'll work it right here. This focus on cash flow to gauge health. We've always been cash flow lenders. Excuse me. We know how this goes. We look at bank statements, 3, 6, 9, 12 months worth, depending on seasonality or geography. And because of our product is a short-term product, makes perfect sense. When you take a step up and you look down at how I guess, again, credit unions and community banks mostly is where we're dealing. 3 years of tax returns, personal and business, 3 years financial statements. And even in the best of times, those are outdated documents. And we do it because, you've got to do it. And I'll explain to you guys on the merchant finance side why tax returns are so important. That's actually the question that came in. So the credit unions, our explanation to them is, yeah, it's great that you've seen that historical data, but you've got to really base the loan amount on how they're currently doing. Those tax returns might be as much as 19 or 20 months old. So to them, the idea is, well, we could really look at cash flow analysis, and we could do financial statement work right off of the bank statements. It's like they're really kind of embracing some of the things that we've known now for more than a decade. But then the converse of that, of course, on our side, in merchant finance, people are saying, oh, we never look at tax returns unless, the deal is over $150,000 or $250,000, and what's the need? Right now, there's a huge need. Like, if we're looking at a customer and, I don't know, $50,000 a month average, and we're like, oh, this guy looks okay, and, this woman runs her business pretty well, and we don't really have a reference point anymore. So the idea is, when we're looking at a 2019 tax return, I know how they performed pre-pandemic. If everything is exactly the same, then everything is the same. If everything is much, much worse this year, you can kind of look back and say, hey, I'll show you a pretty cool slide about timing. Based on the industry they're in or the geography they're in, you might be able to put out a super competitive offer because this is a good business. We know that they're going to grow again. And actually, let me continue to move on. Oh, this is that slide right here. It's a little bit small, but I hope you guys can see it. Uh, and again, estimations. Uh, what are the essential businesses? So, of course, when we talk about industries that small business lenders need to be focused on, just for the safety of their own capital, it's really the essential businesses, and then maybe like one one step removed from those essential businesses, like the folks who serve those industries. And it's got to be that way right now. I know lots of folks are hurting, but we've got to give money to the folks who are operating. And it's funny. So some of the folks that are some of the essential businesses, we're actually seeing huge improvements. And some of it is lack of competition. Some of it is because they're essential, and more folks are using their services. But it's really interesting. And I heard yesterday. I think Jerome Powell and Steve Mnuchin were in front of the Senate yesterday talking about maybe $300 billion for the smallest of the small businesses, and that they've learned from some of their mistakes with the PPP program, that they're really going to target the folks most in need. So let's let the government take care of the folks that we used to work with, and let's us take just half a step up and really focus on the healthier businesses. I'll leave this up while I take some questions. Give me a sec. There's 4 or 5 that have come in. Why are tax returns still important? Just for that reason, just to kind of go back to, well, what is this company's potential or the small business's potential? Pretty important for us. What's another one? Does Capiform have a certification program? That's it. So we do have a certification program, but maybe not exactly as you're asking. So when we bring on a new lender, our idea real early on as we're going through our customer success and our scoping calls and our workshops is really to identify a champion within the organization. And what's neat about our work is once it's up and running, the lender themselves have access to everything. They don't need to send us tickets. They don't need to wait on us. They really have access to the systems. In order for them to have access to the systems, there needs to be that champion. That champion is usually head of lending, head of risk, lead underwriter, someone who can go into the system, has the authority or the hierarchy rights to do so. And we'll get them trained up nice that after some time, it becomes a self-servicing kind of platform. Oh, we're all dealing with this one. On the sales front, how should we approach merchants that have become acclimated to SBA and PPP interest rates? Uh, well, the world is changing, and if these were folks who have been in our space and then ended up getting, $100,000 or $150,000 worth of free money, they know that that's not always going to be the case. I know a lot of folks are probably going to wait. I guess if they can afford to. Some folks are probably going to wait until this new administration comes in and really see what their plans are for small business relief. But again, when you look at the essential businesses, folks who are running, they know that they need money, and they know that with our money and even with our rates, or even specifically with our rates, if they've borrowed from us before, they know what they're doing. They know that they can afford to do this, and they know the benefits that they're getting out of this, short-term injection of capital into their businesses. Folks who are interested in SBA rates or have gotten SBA loans, again, this is a conversation that we've had for years. You go to the SBA to get the building, you go to the leasing company to get the equipment, you come to merchant finance to get the inventory. So I think that is a little bit of a moot point. We've solved that one years ago. How can small lenders compete against the larger A-paper lenders? Well, the short answer there is, why would you even want to compete against the larger A-paper guys? There are niches out there all over the place, and it could be geography, it could be industry, it could be size of business, it could be even the size of the loan that you want to offer. And And it could depend really on even the position that you want to sit in. Uh, there are a few big lenders, but they are only satisfying the needs maybe of a quarter of the customers that are out there looking to raise capital or looking to borrow money. Don't worry so much about those guys. You make sure that your operations are tight and that you have good relationships with your brokers, and you pay your prices are satisfactory, and you pay your brokers, the right amount. And I don't think you have any problems. Like people are borrowing and people are paying 30 cents and people are paying 35 cents. Uh, don't worry. Just keep doing what you're doing, but do it in the right place. Uh, Again, let me go back to the inventory, to the industry slide. Can I make this bigger? If I make this bigger here, does that make it bigger for you guys? I'm not sure. But you could always request this document from us. Oh, somebody wrote back, yes, well, that's cool. Great. So you want to focus, guys, everything that's in this 1 year right here. And then again, it's funny, early in our business, we weren't so keen on online businesses. Almost all of the lenders we work with now are super keen on online businesses. Might be a good place for you guys to either to put some more focus or maybe to spend some marketing dollars. It seems like all they've done was grow. And we know what happens when small businesses are growing. They're starving for capital. They just can't get the inventory they need to keep growing. So you'll be able to provide a very good service there. I wanted to talk a bit about our platform, but I won't just yet. Reach out to us, and yeah, we'll be glad to meet with you. We've got an awesome team. We'll talk about what you guys are working on, talk about what we're working on, see if there's a fit there. Maybe we do a demo for you, even go through some of the math behind what we're doing and how we got to where we got. I know it'll help you, and it'll also help us. We would appreciate it. Again, any more questions? One more look. Okay, that's all of them. Okay, that's awesome. Hey guys, again, wait 1 second. All right, guys, I appreciate it. Thank you very much, and I hope to talk to you all soon. All right, bye now.